We had a low here. You see how we went below that, and we had a run it took up to this point here. Didn't take out that high. If this drops, you want to see this low get completely smoked, not just trade below low it a little bit and then come back off of that. You don't want to see that. For price to already have a stop run like it does here, I don't teach, and I don't think it's something to build a framework on, where you have a low taken here and then one more time take that low, because then we're talking about something like a wolf wave or something like that, or a broadening like a megaphone pattern, which is, again, that's like retail stuff. I'm comfortable being wrong, not using that when it does form, but it's so infrequent, I could care less. So what I have done over the years is looked for opportunities where I expect price to behave a specific way. We have already taken sell side with this low here, with that price run there. So if this does go lower, it should do so and not respect this low at all. Otherwise, we're creating a low, lower low, higher low, and then we'll want to retrace back up into here, or altogether completely run out the highs here, because this is the relatively stronger of the three averages. What I was mentioning, because we've already seen this low here taken, the stops there, and we had an energetic run. This movement lower, I said that if we trade down to that low and go below it, it needs to be done in an animated manner where it's extremely large range down speed and distance. If you ever watch me doing the executions and I'm recording myself entering and managing the trade, sometimes you'll see me say in text, I'll type it out in annotations on the chart, I'm looking for speed and distance, meaning that I want to see a specific level be railroaded through, like just completely disrespect it 100%, just run right through it like it wasn't even there. Whereas if this low hadn't been traded to with this lower, I would expect it to do something like this always, where it's a turtle soup type pattern, where it's a false break below and then a reaction like that. I would not expect this low, if it trades below it, to perform like this. I would expect it to give way immediately and allow a run into this area here, and if not altogether below here. Because we have already seen what? A run on sell side. We've already had that. So it's not going to most likely go down below that low just to make a lower low and then rip higher. I don't like to trade that way. I don't see price like that at all. So I internalize price being delivered if it goes below this low, and it might not. I'm just saying that it may not even go back down here, and that's problematic because we want all three averages, the Dow, the NASDAQ, and the ES, to agree. That's simple Dow theory. That's market breadth, the way we can expect the continuation of a specific price run, higher or lower, a continuation of risk on, risk off. We want to see market environments that are very easy to see those signatures in price. Where we're not getting that today, are we? The Dow's doing what we're seeing here, but we've already had a run below a low right here. So we already had sell side taken in Dow. So there's really no need for this drop here to go below that low unless it's really wanting to go lower, because we've already done the work of going down and stopping traders out that were long. We've already done that here. So how do you use that information with the ES and the NASDAQ? That means that you're probably best suited taking profits in the event that your target or targets may not be filled. They may not be reached. So we're using the insight gleaned from one of the indices, which is the Dow here. And that allows us to go back to, well, let's go back to the NASDAQ first. Okay, so we did trade below that low. It did offer an opportunity to take a partial, but was there any continuation? Not as of yet. And this is where the swing target would be. If we break this low here, the fulcrum point, it could, not that it has to, it could swing as much as that 13,029.75. ES failed to get to our objective, got real close to it, but look how many times it's done this. We have a low. We've taken a low, traded higher. This low was taken here, retraced, normal, went below this low once more. At this time, okay, look at the time of the candle at 10:46, okay? 10:46, let's go back to the Dow. Let us only trade on one chart. Wrong. You don't get the proper, you have to weigh things out. You have a low, a lower low. We've already had stop run on Dow. So this drop down, we're watching to see, does it have any willingness to get through this low? And if it does, and if it did, we would expect this particular indice to really give up the ghost. That means just give up and just stop trying to be the strong one of the day and fall. Bend the knee to what the ES and the NASDAQ is then pushing on it. Because it's only 30 stocks versus 100 in NASDAQ and 500 in the ES. So the point what I'm trying to make is we've already had this run on stops. So if this low is taken out, that would have accelerated the down move in ES and in NASDAQ. But because we've already had this run on sell stops on the Dow, we have to be leery of this low being taken because we've already seen sell side liquidity taken out. So anyone that's long here, they had their stop loss trailed here, they dropped down, cleared their stop, they're no longer long. Then it rallied. Did it take out the high? No. But this drop down in here has to allow for, at least in my mind, this is how I teach my students, to weigh out the relationships of intermarket relationships in the three indices. I don't care about the Russell, I don't care about that average. I'm worried just primarily about the price action in ES, Dow, and NASDAQ. But the insight I just gave you in relationship to that low, that's information I do derive from using the Dow. But it doesn't need to be the Dow that had performed this very thing. Let's just say that this was the NASDAQ. And the NASDAQ had that low, and it went lower low here, and then we were dropping down. I would expect and demand that that low be taken out aggressively with speed and distance, meaning it should go right through it. And because it had no willingness to do that, at the same time on that candle, remember I told you the time of the candle, 10:46. When this candle was coming down and approaching that low, at the same time, ES, right here on that low, when it was trading lower, you should be taking profit, taking some kind of partial, because if you watch my recordings when I'm doing examples, you can clearly see where I have my best case exit, my target, my limit order is sitting there. But then you watch me doing partials along the way, and sometimes it doesn't make any sense if you're new. Like, why am I taking partials? Why am I not just holding for my targets? It doesn't make any sense. And you got, the jokers out there that think they know what they're talking about, and they'll say, partials are stupid, doesn't make any sense, but partials pay every single time, 100% of the time. 100% of the time, a partial profit always makes money. There's never been an instance where you as a trader or me, anyone else, that takes a partial profit where it did not pay you. It always works. That always works. It's 100% accuracy in profitability when you take something off in profit. That's the whole reason why you're doing this. You're not trading to get the best exit, the best entry every single time, because that's unobtainable. You can't do that. You can't. Nobody can do that, okay? There's something that's always going to be a drag on your performance, whether it be your health, your focus, the markets being, well, in my opinion, they're very fickle right now. These are very challenging market conditions. I like a fast and loose market. It doesn't mean trending. It means that it has to have a lot of symmetry to it, but it also needs to be moving in a level where I can predetermine with a great deal of ease. If I don't have that, then I have to either decide to do nothing or just simply observe, tape read. But my point was, when we're seeing it trade down here, I may not get my objective, which is what I showed you here. It may not reach that. And these are all the things that you're not privy to when I'm doing those live executions, because I'm recording it and then I'm speeding it up inside of a 2-minute and 15-second limit that Twitter places on me. So I condense all that stuff, but you don't understand many times why I'm taking partials. I'm showing you the logic right now using the Dow, how I would use that information because the Dow had already went down and took out its sell side. So I would demand that the Dow would have careened right on through that old low. And because it hadn't done so, and ES is expanding lower, even though it's getting real close to my objective, the clowns out there that'll tell you hold for your target and don't take no partials, it's all or nothing. What do you do in these instances like this? Do you want to be in trades that have that much of a retracement? I don't like those types of trades. Not when I'm expecting certain things to unfold. Like I want to be in a trade that is a low resistance liquidity run, where it's easy, it just runs right for my objectives, and it's just like a hot knife through butter. And my tools and my teachings teach you how to find those conditions, but those conditions don't exist every single day, and that's the problem with new traders coming to me. They think because of what I'm teaching, therefore it should be every single day, because they take my motto is every week, every day, and it won't stop. The logic of what I teach is there every day. But your specific model, now listen, this is important. Your specific model, the thing that you look for, the framework that gives you the trade idea, the entry mechanism, the multiplier that you use to get into that trade may not be there that session, that day, on that particular asset. But it will exist somewhere else in another asset. And that's the problem. That's the problem, because that invites the thing I teach you not to do, which is have 28 different markets and try to scatter your attention. You can't do that. You would be better rewarded by limiting your focus to one or two at most closely correlated markets like NASDAQ and ES, or if you're trading Forex, British pound and euro dollar, which is exactly how I taught for years when I was predominantly teaching Forex, using the dollar index as a intermarket relationship that would be inversely related to what the performance of cable and euro would do. So right away, you can see everything I just outlined, all of that was a reason and justification for this type of move here. So for the people that say, don't take partials, right there, you just got stopped out. Well done. You got nothing. For the time you invested, you got nothing. Who's the greater fool? Someone that uses logic that yields partial, if for nothing more, still a gain, still a profit, versus the guy that wants to teach your stop loss, that's your exit, and your target is your only profit. Like that's really, really placing a lot of demand on your performance when you don't have that experience in the beginning. How could you reasonably expect to have the wherewithal to get into a trade where you know that you got a solid entry, you know that your stop loss is unlikely to get hit, and you know for a certainty. Now think about that's what's being promoted in this logic. Don't take partials. You're stating that in your infancy as a developing student and trader, you know absolutely 100% that your target's getting hit. So accept nothing less. That, my friends, is too myopic. That is someone that is posing as an educator but has really no idea what they're talking about. You can't take someone that's new, a greenhorn, right off the streets, never done this before, and tell them, hold for your full target or get stopped out and learn from it. You know what you're going to learn? That you probably don't have the discipline or patience to stay at this long enough to find profitability in that approach. Whereas I teach, if it gives you something to take off, take it. That little reward many times is the thing that carries you through the times that everybody goes through when they're learning how to do this and price actions like this. This stuff right here, this is the stuff that breaks the backs of new students. They don't want to stay in this. They think there's something else better. They're going to chase something else because somebody else out there did something with really no logic behind it, and they want to champion that result on social media. And they think, well, they got something. And then you go chase them, and then they go into a tailspin. They can't find the big moves, or they can't find a real nice move, and somebody else is producing that. And look what I did. Oh, let me jump over there and do that. Versus just sticking to a logic that works well in the right market conditions. Think. You're here to learn how to read price action and control your emotions and your actions. You have to have a reason to be pushing a button. But I'm showing you in these live streams that there are times when you don't want to push the button. Okay, so make a lower low here on NASDAQ, but look what was going on in ES. So we're all over the place. Let's go back to Dow. Okay, remember what I said earlier about this low here? We've already cleared out sell side. So the only reason to come back down below that low is to completely wipe out all the movement higher on the Dow. And that would accelerate the lower moves on ES and NASDAQ. All of this run, look at that. Here's your imbalance. So in a symmetrical, perfect market condition, the market should have went right to that there and then rolled over. None of this should happen. But what's resting above these highs? What's above these highs here? What kind of stops? And who's using that stop? Shorts. So how do you protect a short position? A buy stop. So all this run up here is just setting the stage for a ram above here, which is problematic for ES moving lower. So we didn't get down to that imbalance I identified it could have reached for. We did go lower. We traded below the sell side here, but that was very, very short-lived. And what was the warning sign? What I showed you in the Dow. Real time explaining it to you why it's likely to be a factor in seeing the sustained price run lower on ES. Even though the target was identified, how do you know when a target's not going to get there, Michael? These are lessons I can't write in a paragraph. I can't write a book and have chapters that talk about that. You have to see me doing it like this, because then it makes you'll remember this now because you saw it. You're going to know, okay, if I'm in a price run and I'm going to trade, how is the other averages if I'm trading, stock indices, or you're trading stock indices, let's say it that way. How do you trust that the trade's likely to continue? Well, the things I'm telling you to look for. But if you have these big road, bulletin boards like we saw in the Dow saying, okay, we're having difficulty here, expecting it to go lower because the Dow already ran its sell side. So if it's not likely to take that low out, then you probably should be taking partials as it's careening into your target. Just take a partial because you might not get that target filled. And when you do get stopped out on your balance, guess how it feels? I made money. You didn't beat me. That's what I think in my head all the time. Every single time I do that, you didn't beat me. You stopped me from getting all of what I was trying to get, but I still took something off your rear end. That's how I look at it. And I might not get a full pound. I might get a quarter pound. I might get a half a pound. But they didn't take anything off of me. And I don't feel any regret when the market trades against me and stops out my remaining balance. Because as soon as you take partial, then you reduce the stop. You do not reduce your stop to break even or better until you take a partial. That's a very hard thing to grow accustomed to as a new trader, because you're thinking, I got to get to break even. I got to get to protect myself. I don't want to take a losing trade. That needs to stop. You need to stop worrying about that. And the easiest way to get over that is learning what I'm teaching you to avoid the conditions like we're seeing here, where it's iffy. It's really hard for price to have these sustained price runs to reach into your targets without having this choppy retracements. It's frustrating. So that's why I teach in a mentorship capacity. Most of these lessons are to keep your mindset focused on, yeah, you can observe price action in these types of conditions. Yes, you can expect some type of fluctuations and see it paying out to a certain degree, but not like in low resistance liquidity runs, where the market just simply lays it in your hands and asks you if you want more. Whereas this one, when it's like this is high resistance. High resistance liquidity runs, yeah, you get movement. Yeah, you can probably see this and that panning out, but you're not getting the full runs. And everything is disjointed. A symmetrical market is where the dollar is going higher, and the NASDAQ, the Dow, and the ES are moving lower. And they're not having much of any kind of consolidation or retracement when the price runs begin. That's a symmetrical market. You have a risk-off scenario, dollar higher, all indices moving in the same direction, and they're all moving very nicely, and all price inefficiencies are being respected. Whereas here we have a lot of give and take, it's back and forth. I don't like these types of conditions. Can I find five handles in that? Yes. But I know I can, whatever I could do in an environment like this, I can do 10 times more if I just wait to the next day or the day after that. That's maturity, that's experience. You, as a new student, don't have that. So you think that the only trade that's ever going to matter is the one you're about to take right now. And your entire career rests upon the outcome of this next trade. It sounds silly, but if you really think about it, that's exactly what you're doing. I know it because I did that too. And that was because I didn't know how to trade. I didn't know how to read price. I didn't know the consistency on how these things form multiple times over the course of a week. And when you have this understanding and you have this experience, you don't feel like a victim of your own emotions where you feel like you got to do something. I got to push a button. I got to do something. No, you don't. Who says you have to do anything? Well, I'm saying you have to learn how to read price, and you have to form discipline and build self-control. Those are skill sets that happen by doing what we're doing here. Not one button was pushed. No entry, nothing. I'm thankful that I've done nothing today. I'm appreciative of the fact that I am aware still that these are conditions that are going to be problematic for me. And there we go. Relative equal highs. I told you what would be above that buy side. What was the warning sign? We already seen sell stops taken on this pass below that low. So this is just a retracement lower, but it was helpful in the regards of how we would manage our ES or a NASDAQ trade. Take partials. How much? How much of a partial do you think you would have taken given the context I was outlining real time with this low in relationship to that low, having already seen the sell stops? You would take 50%. You don't take your lowest partial off. You take a large portion off because you have warning signs that it's not likely to do what? It's not likely to go lower. But if it does, that's great. You have the half of your position still on in the short on ES or short on the NASDAQ. You know, think about it. How many times have you read a book? Things that are going to be problematic to your trades and why and how they form. That's chapters I'm writing, but they're not there in books right now. Everything that I do in my mentorship is along the lines of those types of things. I'm filling the void that everybody else has. It doesn't matter if you like me or don't like me. It doesn't matter if you are profitable or unprofitable with your strategies. The things that are permeated in everybody's experience as a developing student of price action or trader, we all go through these things.